Allons-y, Bernard, tu veux
Parfait.
un petit mot?
Parfait. Bien, bonsoir à toutes et à tous, ladies and gentlemen, dear alumni, dear friends. Good evening, everyone. I'm very happy to welcome you tonight. I hope that you are doing well. On behalf of Pascal Perrineau, President of Sciences Po Alumni, and as Executive Director of Sciences Po Alumni, I am very happy to welcome you this evening to launch this conference around Erwan Rambourg. Erwan Rambourg, bonsoir, good evening. And thank you for having accepted our invitation. So very special thanks to Paul Michon, Head of Communication at Kering. Thank you, Paul, for making this initiative possible and for facilitating and moderating this evening's conference. So I pay actually a very special attention to this kind of event and for several reasons. First of all, because the Groupe Professionnel Luxe, our professional group dealing with luxury issues, is a particularly active one, co-headed by Paul Michon and Thierry Oriès. And the dynamism of this professional group is, of course, illustrated tonight. Then, because it's also an event which takes place in English, which is still too rare at Sciences Po Alumni, and I remind you that nearly 50% of Sciences Po students are foreigners, and therefore our association must support this movement. And finally, because this is an event that is welcoming students of the Marketing, New Luxury and Art de Vivre master program headed by Eva Bellinghausen, and we must never forget that Sciences Po Alumni is, of course, the association of Sciences Po graduates, but also of Sciences Po students, especially current students, degree-seeking students. So for all those reasons, I'm very happy to see you this evening. I wish you a great conference, and I immediately hand over to Paul and Eva.
Thank you very much, Bernard. Thank you for your kind words. So let's welcome Erwan Rambourg now. A few words of introduction maybe about Erwan. He can be considered as one of the best experts of the luxury business. Actually, he started his career in the industry in marketing positions at LVMH and Richemont. Namely for brands like Guerlain, Dior, and Cartier. Then he shifted to become a financial analyst, building on his own experience to look at luxury stocks from outside. He joined HSBC as a sell-side analyst covering stocks in luxury, sporting goods, and spirits from Paris and London. And in 2011, he took a very interesting decision. He moved to Hong Kong to manage the consumer and retail equity research team in Asia for HSBC at a very exciting moment, of course, for the region. And this is where he wrote his first book, The Bling Dynasty, where he was announcing the rise of China as a key market for luxury. He was announcing that this rise was actually just at its beginning. Then after 5 years, he moved to New York, where he is now managing director and global co-head of consumer and retail research for HSBC. And these days, Erwan is publishing another book with a new set of prophecies around the luxury industry, Future Luxe, what's ahead for the business of luxury. So we are going to discuss about this book with Erwan. It's a deep dive into the major trends that are shaping our industry for the coming years. Of course, it's about China, it's about women buying for themselves, it's about new generations, it's also about new expectations from these customers, not only high quality, high creativity, but also values and sincerity. So Erwan, thank you for being with us tonight. With Eva, we are going to moderate this conversation. Just a few words to say that everyone is most welcome to ask questions directly in the chat section of Zoom. And together with Eva, we will moderate and play the timekeepers so that we have time to discuss many different topics. So again, welcome everyone. And just a few words to apologize Thierry Auriez, who is the co-chair of the Group Luxe of Sciences Po Alumni, who is not able to be with us tonight. He's sorry about that, but I just wanted to say that on behalf of him. So maybe first question for you, Erwan, is the most obvious one, probably, which is about basically the impact of the COVID-19 crisis and of the past months on the luxury industry. Quite surprisingly, we can see that the stock prices of the main players in the luxury sector are still quite high. There is no, it doesn't seem to have a big impact as it used to have in the past. What is your point of view about the state of the luxury industry now in the middle of this crisis, and what are the main impacts of the crisis on those players?
Sure. Thank you very much. So before I try to answer the question, I just wanted to take this opportunity to, so I've been going back and forth with Paul and Eva over time. So I just wanted to thank you for making this happen. Thank you, Bernard, for the introduction as well. And wanted to welcome all of the alumni and students. It's an honor for me to be telling you about the book. I think it's the first time I'm actually presenting to people based in France, even though I am a French citizen. We're doing this in English because I understand we have a few English speakers. And at the end of the day, if you do read the book, it's written in English to begin with. So hopefully what I can tell you about luxury will be coherent versus what I've written. To answer your question, Paul, I would say it seems that I get the idea of writing books in times of crisis. So as you mentioned, I published the Bling Dynasty about 6 years ago, right after you had initial talks from Xi Jinping around curbing gifting and corruption in China, going after the tigers and flies, as he put it at the time. And you had many observers of luxury who were thinking this was the end of Chinese luxury consumption, and that the future would be about the Indonesian, the Indian, the Brazilian, the Nigerian consumers. And the book was there to say, no, the future is still about China and Chinese consumers. And there was a lot of hope in that book relative to a period of doubt. This time around, it's even more extreme, if I can say, because we're going through a period of massive change, lots of concerns, lots of fear. I don't know if some of you follow the presidential debate yesterday in the US. You know, obviously, not a lot of people are relaxed these days. And I have to say that, again, this is a book of hope. This is a book of optimism. Essentially, the book is a lot broader than just about the Chinese consumer. Obviously, the consumer is an important part within the book, but it's more about where this sector will be in the next 10 years post-COVID. And to answer your question in terms of how COVID has influenced the sector and why on earth are the share prices still pretty high in terms of the stock market for luxury. So on the first part, I would say COVID-19 seems to be essentially an accelerator of trends. So I actually wrote this book and finished the first draft late March. And then obviously discussing with my publisher, we thought that was not a good timing because you had obviously the impacts of COVID-19 initially in China and then in the rest of the world. And then following on from that, you had a lot of societal change that started to come about with the Black Lives Matter movement, for example, in the US. And so we thought about postponing. And so between basically April and late June, I rewrote a lot of the sections and I actually asked a few interviewees of which François-Henri Pinault, who actually wrote the foreword of the book, to also rewrite his foreword to take into account the impacts of what was unfolding. The reality is, I didn't add any chapter. I didn't subtract any chapter. A lot of the trends that were identified are simply going to get a boost, an accelerating boost. In other words, what could have unfolded in a 2 to 3 year period is just taking a matter of weeks or months to unfold. And so the reason I'm optimistic is because, as you mentioned, I used to work in the sector. I had an experience at LVMH and Richemont, and I've kept very close to many people in the sector. And I get a sense that the success of luxury has developed a bit of complacency in some instances, with very good growth, very high cash generation, very high margins, and maybe this sentiment that some might have in the sector that they've done a good job, and that you don't necessarily need to change what's working. And so many hard to take decisions were postponed, or were just, you just had managers putting their heads in the sand. And so I think this is a great opportunity to take tough decisions that maybe should have been taken a while ago. But if I just give you a few examples of acceleration, I would point to essentially 4 things. One is localization of the business. So we've seen it, for example, with the repatriation of growth in mainland China. The repatriation of growth in China actually started pre-COVID, started about 2.5 years ago. But obviously COVID-19 having all the borders being shut accelerated that phenomenon of thinking local. Okay, so if you can sell to tourists, that should be considered as the cherry on the cake. The reality is you need to think local. Chinese are buying in China. Americans right now are buying in the US because they don't have a choice. They can't come to Europe, et cetera, et cetera. So COVID-19, I think, you've had a bit of a wake-up call in Hong Kong a few years ago already, when mainland Chinese didn't come to Hong Kong as much, and you had a lot of tough choices with, the managers for the businesses in Hong Kong to think, how can we actually re-engage with local consumers? How can we consider that if the Chinese come back, it's a bonus, but it can't be the entire cake. Again, it has to be the cherry on the cake. So first accelerating phenomenon for me has been localization versus globalization. And again, the world will reopen. Hopefully we'll find a vaccine. Hopefully, if we don't find a vaccine, we'll find a way to live with this COVID-19 or COVID-20 or whatever it becomes. The world will reopen, but what will not change, I think, is the reality that the bulk of consumption might eventually be at home. So this happened with the Japanese more than 20 years ago. It happened artificially with the Chinese now. But even when the world reopens, they will probably start to make purchases abroad and help the business of luxury, notably in Europe and in Hong Kong and in other places. But I think you'll have a majority of purchases at home. So firstly, repatriation. Secondly, the digitalization of the business. Now, when I say digitalization, it's not necessarily just selling online. It's more communicating online. It's more engaging, telling stories to the consumers via her natural approach, which is, if she is essentially female, essentially Asian, essentially young, she was born with a Samsung or an iPhone almost in her hands. And so knowing how to communicate with her means has become essential. Now, it also comes with greater sales online, but as we might mention later, I don't really think that's the future of luxury. I think the future of luxury will be to tell stories online, not necessarily to sell online. But digitalization is also around systems and around knowing in depth your consumer and how she functions. I shouldn't be saying this, but when I used to work at Richemont, I didn't have a clue who we were selling to, but I didn't need to know, because the growth was such that we had to basically focus on, can I produce enough, because the demand is tremendous. Today it's completely different. Today it's a more competitive landscape. Growth is harder to come about. I need to know who I'm selling to. I need to know how she functions. I need to know, out of the 10 hours she spends on her iPhone, what exactly is she doing? And I need to adapt to her. So you might have seen this joke around, who took care of your tech revolution if you're a luxury brand? Was it your CTO? Was it your CEO? And the answer is neither. It was COVID-19. So again, this is the spark, this is the catalyst, which has made a lot of managers, as people say in the US, wake up and smell the coffee and try to really get to grips with who you're selling to. The third element, which is partly linked to that because there is data involved, is retail excellence. It's this idea that, again, CRM systems in store, knowledge of the consumer needs to be really paramount, but it's also the realization that if it's tough to go to a store because I'm cautious for health issues, it better be worth my while, okay? It better be fun. It better be entertaining. It better be different. It better be the opposite of what American people call déjà vu, okay? Which is not a term we use in French, but it's this idea of potential boredom. I don't want to go to a store where I have the illusion that I've already been there, okay? If I go to the Vuitton Soho store in New York, I expect the flagship on Fifth Avenue to be completely different. If I go to the Saint Laurent store that opened over the summer in Paris, I expect to be surprised. I expect to, expect the unexpected, basically, is what I'm trying to say. We've come from a period of time when, you had some of the main brands opening flagship stores in Shanghai 15 years ago and thinking, oh, this works, I'll open 40 of those. But that's not what the consumer wants anymore. She wants to be surprised. She wants to be delighted. She wants, again, to be entertained. And this is partly driven by the Chinese because, when I was based in Hong Kong, the big day out was to go to the shopping mall on the weekend. I thought it was thoroughly depressing, but the reality is you went out with your family, with your friends, with your coworkers, and that was the day out. And again, you were seeking entertainment. You weren't seeking a sort of Me Too experience. So this period is accelerating the change in retail. So first, repatriation or localization. Second, acceleration of digitalization. Third, acceleration of a focus on retail excellence. And fourth, and this is going to come across as being a bit sad if you are working for a small independent brand, consolidation, M&A, scale matters a lot more today than it did yesterday. The reason for that is, especially in a period where it's sort of buy less, buy better, the bigger brands are going to massively take share from the smaller brands. And you will have a Darwinism of brands, a bit like you're having a Darwinism of retail. Now, the Darwinism of brands is a bit less violent in the sense that I don't know a lot of independent brands that are at risk of going bust, unlike in retail. In retail, you have, notably in the US, retail concepts that are going out of business. I don't think any brand that I can think of, at least in luxury, is going out of business, but I think a lot of brands will be losing relevance. And so if you're managing an independent brand for the long term, you're not a forced seller. You're probably going to survive this period. You're probably going to make good profits next year as things rebound. But the reality is if you're number 17 in handbags or number 42 in footwear and you're on your own, you don't have a voice. And so it's going to be a lot more difficult to imagine that you can keep your name in the bright lights over the next generation, over the next 25 to 30 years. So what we saw over the past 10 years is a lot of consolidation in the space. LVMH started as LV and MH, so 3 assets. Now they have 76 or maybe 77 if Tiffany happens. Kering has, I think, a mission also to diversify. Richemont, you can think about today mono brand companies like Moncler who might become actors of consolidation themselves. But my view is as you exit this crisis, the big will be bigger, the independents will be weaker, and you'll have a huge integration. So I can tell you more about M&A if we focus on that later, but I would say these are the 4 areas where COVID will act as an accelerator of trends. To try to answer your question, Paul, on why on earth is the share price of Kering, LVMH, Richemont, et cetera, Hermes at an all-time high? So there are a few aspects here. There's a macro aspect, which is that you could argue the markets are at all-time high. So if you look at the S&P 500 in the US, the equity markets are doing incredibly well for a whole bunch of different reasons. Money is free. You're not rewarded to be investing in bonds. Maybe that forces a lot of liquidity and volumes into the equity market. you have had a very solid rebound in China. And now the whole theme, again, if you watched the debate yesterday, is a V-shaped recovery versus a K-shaped recovery in the US. So, Trump is basically saying we're going through a massive V-shaped recovery in the US. A lot of employment was destroyed. Now it's coming back. There is a swift economic rebound. To be fair, we are seeing for luxury a swift economic rebound as well for the luxury sector in the US. I think most of the companies we would speak to today are seeing trends in the US that they could not have dreamed of 6 or 8 weeks ago. So it's true that the rebound is pretty massive. The other explanation I would say is, in terms of the stock market, luxury companies tend to be high beta, okay? So when things are doing well, they're doing even better from a stock perspective. When the world is coming to an end, think about 08, 09, the luxury stocks collapse. This time around, it's the only exception in 20 years when these stocks actually do better than the market. I see 2 reasons to that. One is the China tag. If the world is coming to an end and the only sliver of hope in April or May is China and Chinese consumers are doing well, who's exposed to Chinese consumers? Spirits, cosmetics, luxury, that's where you want to hide. That's one specific. The other specific is you have to bear in mind that fund managers look at a very diversified number of subsectors. They can look at airlines, they can look at oil, they can look at pharma, they can look at banks, they can look at retail. They can look at a lot of sectors where you are seeing risks of bankruptcies. They look at luxury and they look at Kering, they look at Richemont, they look at LVMH and they think, no, these are not going bust. Hermes is not going bust. Moncler is not going bust. So to a certain extent, you've had a sort of shift in terms of investment where you can sleep at night. And if you have a good exposure to Chinese consumers, and if you're going to be around for the next 15 years, that's good enough for many investors. So maybe that was a long answer to a short question. I'll try to be more.
Well, it's a good introduction to the book, etc.
Yes, Erwan, let me put the second question, if you don't mind. You said that there was a massive rebound, and obviously as a director of a program that puts young graduates on the market, I hope that that massive rebound also has an impact on employment for our students and young graduates. What do you think employment will look like in the future in the luxury industry in the next few years, months?
Yeah, so let's see what your horizon is. I think the next few months, yeah, we're still a bit in a tunnel, and the reason I say this is, I think a lot of the brands, whether they're part of bigger groups or independent, are looking to repair, are looking to take care of their staff. They're looking to renegotiate rents. They're looking to take out some fixed costs in the business. They're looking to understand what just hit them. They're looking to redefine their digital strategy. They're looking to optimize their business for a rebound. I don't think a lot of brands are telling you we are eager to recruit right now. They're eager to fix their business, to understand what the long-term consequences of the crisis will be, to understand what the opportunities will be, to probably shift investments. Maybe you have too many stores in Europe. Maybe you don't have enough in Chinese domestic travel retail. Maybe you need to cut some partnerships because they're not brand equity enhancing. So, there are a lot of things you're doing today to manage a tighter ship, to be more efficient, to be more nimble, to gain speed. But you're not necessarily willing to add some costs at this very moment. Now, this is what I'm saying is very short term, okay? If the rebound is confirmed in the US, and as in when, it's not an if, as in when travel starts again, I'm not a pharma guru. I can't tell you, like Trump will tell you yesterday, that the vaccine will come in 2 weeks. I don't know. Let's be humble. But the reality is, again, whether you have a vaccine or whether we learn to live with this, people will start traveling again. Travel retail is not dead. So that's the short-term view. The long-term view is this is probably one of the best industries to develop a career, in my view, because again, there are huge barriers to entry. there are very few independent brands today. You know, I said there'll be a lot more M&A in the next 10 years, yes, but at the same time, it's probably a handful of brands that you can hope to integrate, because it's not as if you had luxury brands being created every day. And you have a great compounding nature of growth. Lots of growth ahead with the American consumer, even more tremendous growth ahead with the Chinese consumer. And then, you know, as I said before, as I wrote 6 years ago in my first book, the hope is Indian, Indonesian, Brazilian, Nigerian. It's the hope. Nothing has happened yet, you know? So avenues to growth are plenty. And if I were a student today, honestly, if I look at a broad consumer space, I would, you know, I'm actually quite fortunate because I'm an analyst on luxury goods and sporting goods. These are two sectors where I see phenomenal growth for the long term. If you are thinking about working for Nike, Adidas, Puma, Lululemon, or a startup in sporting goods, I think it's a great choice, because honestly, being in that sector will ensure great opportunities, and luxury, you know, different drivers, but still phenomenal growth ahead. So, I think you've come to the right place if you're studying with Eva. I think you've come to the right sector if your idea is to integrate a luxury or sporting goods company. These brands are not disappearing tomorrow. And the insights, the long-term approach that, you know, the great thing is these are mostly family-controlled companies. So when Bernard Arnault, François-Henri Pinault, Johann Rupert, the people who run Chanel, think about their brands, they don't really care about short-term profits. They care about long-term brand equity. They're building this for the next generation. And so from a stock market perspective, it's not necessarily a good thing, but from a career perspective, you know, they're making the right choices. You know, they're investing in the right spots to ensure that the brand equity is that much stronger in 10, 15, 20 years. So yeah, I would certainly encourage anyone who was thinking that, you know, the short term is tough to persevere, because this is a sector that's well worth your while.
Thank you, and persevere we will. Good news for the student. Thank you very much.
Yeah, when you were talking about the customers just earlier, you were saying she, and the book is also about the rising power of women as customers in this industry. Why? I mean, it seems that for you, the typical luxury customer is a Chinese woman. Why do you write in the book that women are the future of the industry, basically?
So it's funny because, so the first chapter is called The Future is Female. And a few people who read the book told me, well, the past was female and the present is female. Why are you saying the future is female? And that's a good point. I mean, clearly the majority of luxury sales are driven by female purchases, but so it is already the case. But I think we are just at the cusp of female purchasing booming. You've had, you know, a change in the political landscape recently in Japan. Shinzo Abe was talking about Womenomics. Now, Womenomics are not Japan specific. Womenomics are a global phenomenon. And it's basically this idea that if you look at salary gaps across the planet, they are converging. So women earn less income than men, but year after year after year, that gap is getting lower. The participation rate to employment year after year is also converging. So you have more and more women participating in the workforce. And then more phenomenally, you can look at the change in the family structure. You can look at the reality that people are getting married a lot later today than they were just 10 years ago, if they get married at all. People are having kids a lot later today than they were 10 years ago, if they are having kids at all. And so the reality is you are in an environment where I have a lot more time to spend for myself rather than to have to spend time and spend money to basically take care of a family. So you have essentially economics at play, which will mean that you'll have significantly more spending in the next 10 years from female consumers than you've had as a proportion for the past 10 years. And then you have, you know, I guess, more societal evolutions. You've had the Me Too movement in the US. which resonated across the world, where people realize that the place of women in society needs to change, their role needs to be enhanced, where you have a realization that in many management roles, women are more suited than men. You've had a really concrete example with COVID-19. I mean, if you look at the countries who have addressed the issue the most efficiently, surprise, surprise, they're all run by female politicians. So, for me, it's a combination of hard numbers and economics, and basically a propensity to spend, which is about to basically accelerate dramatically. But it's also a society that is gradually changing. And so for me, the obvious beneficiaries, on paper will be those subsectors that are already driven by women. So, if you think about jewelry, if you think about cosmetics, if you think about handbags and accessories, these are obvious beneficiaries, but there are other beneficiaries. And on purpose, I took an example and I interviewed an entrepreneur in a startup spirits brand in my book, who is developing a spirits brand by women for women. Now, I love the brand. It's not restricted to women. It just appeals more broadly. And the reason I took that example is spirits is a bit of a caricature in terms of how the communication, how the positioning, how even the labels or the names are really macho, are really basically targeting men, forgetting the reality that 80% of spending in most households are spending decisions are basically dominated by women already. So so I would say you are moving from, jewelry is really interesting from that point of view, because jewelry 10, 15 years ago was very much driven by diamonds, because it was very much me as a woman just waiting for him to wake up and realize that I needed an engagement ring. That's over. The future of jewelry is about self-purchasing. It's about impulse purchasing. It's about women buying for themselves. It's about self-gifting. So I'm not telling you that no one will ever get married again and that diamonds are finished. But if you look at the past 10 years, the past decade, you've had very, very slight growth in diamond jewelry sales. You've had huge growth in jewelry. And this is about to accelerate further in my view. So, people who say the past was female, the present was female, they're right. But I would caution them that you're about to see a further acceleration. You might have a few exceptions. People will look at male skincare, for example, which is a bit of a niche development, which seems to be getting traction. But also in a time of crisis, men tend to cut for themselves, and then women, and then children. Okay, so the most resilient business you can be in today is if you're doing kids, which obviously is not a big portion of luxury sales overall. Women are more resilient, men tend to cut first. So if you have a male-driven business, think about brands like Boss, or think about brands like Brioni, or think about brands like Zegna. Not only are they under pressure because they sell to men, they're also under pressure because they're quite formal in some instances. So that's a different topic. But formality, if we're all watching yoga tutorials in front of our Zoom, I guess casualization gets a bit of a boost. So in essence, a lot of brands are wondering, who is my emerging consumer? And a lot of times we look at foreign markets. And the reality is the emerging consumer for me is very close to home, and she's a she.
If I may ask the next question, talking about the new consumers or the emerging consumers who are not so close to home, at least not for us. What about the Chinese luxury, the evolution of the Chinese luxury consumption and the impacts on the sector?
Yeah, so Chinese consumption is dominant. Chinese growth is dominant. Sometimes brand managers or students are afraid that if Chinese nationals as a percentage of sales become too important, it'll be a risk for the sector. I think it's important to be reminded that the Japanese in 2003 for a brand like Vuitton were 53% of sales. The Chinese today are not at that level of penetration. So I understand the fear that you don't want to put all of your eggs in the same basket, but the reality is, bizarrely, sales by nationality today are a bit more balanced than they were 20 or 15 years ago for the sector. What I would say is that there's still a lot of recruitment to be done. There's an example given by the Brookings Institute that says that out of the next 1 billion middle class consumers, so basically consumers entering the middle class, 88% will be in Asia. Which sounds nuts, but it's the reality of the metrics. And within those, obviously, an important part will be Chinese. I think it's important to, again, bear in mind that luxury is a recruitment market. Okay, growth comes from essentially bringing in more consumers to the base of your pyramid. It's great if you can make them loyal, but currently it's not what drives growth. Moncler, for example, will tell you that in 2019, 72% of their sales were to first-time purchasers. It sounds completely crazy, but it's true. That's global. Imagine what it can be in China. You know, if it's 72% of people buying, spending on Moncler in 2019 were first-time purchasers, in China, it's probably above 90%. So it's pure recruitment. Now, so the way you need to think about it is, what is my target market? And if we ask that question to, let's just take Vuitton, because it's a bit of a proxy for many things, but Vuitton's target market in China a year ago was probably 15 million people, 1.5. And they were selling to 10%. So they were selling to 1.5 million people. Now, immediately when I tell you that, some people will think, oh, how do I increase the penetration rate? How do I sell to more than 10% of my target market? And that's not the right question. The right question is, what does the 15 million become in 4 years? And the answer is 30, okay? So your penetration rate can remain just 10% of your target market. You will still double sales in China over the next 4 years. So again, you have to think in terms of bodies, if I can say. You have to think in terms of volumes. You have to think in terms of addressable market. And you have to think in terms of my place in society. You know, there are differences in cultural attributes. There are differences in priorities. If I am a young, wealthy female Chinese, luxury is paramount for my place in society. In Western cultures, it might be a bit different. You know, I think the American consumer is closer to the Chinese consumer than the Western European consumer might be. You know, in Western Europe, you might have other priorities than to absolutely get the latest and greatest product from the latest and greatest brand to fit in. It's a psychological skew. You know, a lot of people believe that luxury demand is correlated to wealth. Obviously, you have to be a bit wealthy to buy luxury, but the biggest correlation for me is psychology. You know, we talk about a feel-good factor. There's a financial aspect to the feel-good factor. How much do I have in my bank account? What is the equity market doing? You know, do I own a property? How much is it worth? That's fine. That's one attribute. The bigger attribute for me is the feel-good factor. Do I trust the future? Do I trust the economy? Do I trust the country I live in? And if you ask all of those questions to Chinese citizens, the answer is yes, yes, and yes. I am absolutely confident in the future of my country. I am absolutely confident in the political landscape. You know, it came as a shock when Xi Jinping made it obvious that he was there for life. You know, if you're a Western citizen, you think that's odd. If you're a Chinese citizen, you are reassured. Stability is a great positive for Chinese consumers. So you have political stability, you have economic growth, you have, I mean, to go back to Xi Jinping, you know, he was parading in the streets of Wuhan in April, basically telling his citizens, you should be proud of how we dealt with the COVID-19 issue. You should go out. I mean, he didn't say you should go out and buy luxury products, but he basically said, have pride in your country, go out, spend, support the economy. And as a consequence, you know, wealthy individuals took the message that it was fine to reward yourself. You know, you have lived through this. I speak to people in Shanghai who tell me COVID-19 is a vague negative souvenir. We've moved on. Maybe I'm biased because I'm based in New York. I don't think I will ever say it's a vague negative souvenir. It's been a 6-month trauma and ongoing. But yeah, I think the psychology in China is, you know, if you haven't been to China recently, or if you haven't spoken to friends in China, I think you'd be shocked at how optimistic people are. and how willing they are to spend. And I kept on reading recently articles around the death of the logo and understated luxury and let's be discreet in tough times. Chinese won't resonate with that message. It's, again, they went through a period of 1.5 months of doubt, and now they're, they're back and they're happy to spend.
Well, Paul, Erwan, sorry, that leads us in fact to the next question, and it's quite logical. We get a question here in the chat from Cécile, who thanks you for the clarity and energy of your presentation. I join her there, and has the following question: how do you see the impact of a less conspicuous consumption and/or search for simplicity driven by a greater climate change awareness, which resonates with what you just said about China?
So I think brands can have a great breadth in terms of product assortment. If you look at the Gucci.com website here in the US versus what the Gucci website is presenting in China, you recognize you're absolutely in the same universe and you're with the same brand, but here you'll have monochrome handbags, and in China it'll be more buoyant, more more colorful, more exuberant. And that's okay. But to be fair, we've also had comments from many companies recently in the US telling us that so-called signature products, so basically handbags with logos on them, are increasing, have increased over the summer as a proportion of total sales. And people like Capri, the people who own Michael Kors and Versace and Jimmy Choo, or people like Tapestry, the people who own Coach and Stuart Weitzman and Kate Spade, have seen a greater logo content in the US over the summer. So what that tells me is what you had following 9/11, which was called the guilt factor. If you spoke to people at Tiffany and Cartier, they told you, after 9/11, it's vulgar to buy luxury products in the US. It's inappropriate. It's something you don't do. No one's saying that in the US right now. Wealthy individuals, again, have this sort of survival trait of, I've been through this and I've survived. It's fine to treat myself. I can buy stuff with logos. Now, to answer your question about subtlety, I think there are reasons to believe that future designs will be a bit more subtle for two reasons. One, because you have to take into account the sensibilities of different nationalities. So if the Chinese are exuberant, it's clear that if you're British or if you're American, these days, you might think about it twice before going out with a very loud product or a very in-your-face product, or a product where, some people have talked about a K-shaped recovery in the US, where people who were not well off before the crisis are even worse off. So there is a lot of misery in the US today as well. And on the other part of the K, you have people who are wealthy, who are feeling even better about themselves, but maybe they should be a bit more subtle. So in the designs, you have to take into account psychology and differences by nationality. What you also need to take into account is, again, as I was saying, it's buy less, buy better. So again, the bigger brands are outperforming the smaller brands, but even within the bigger brands, you are going for iconic products. You are buying the Trinity or the Love Ring at Cartier. You're buying the sort of the 2-3 products that the brand is known for. You're buying the iconic handbag at Gucci, at Vuitton. You're probably not spending hours trying on footwear and flashy dresses, etc. And there's also a consideration in terms of excess inventory. We went through a period of sales collapsing, and so the nice to have seasonal products, which were an important part of your sales, that's going to be more restricted because you will have more discipline. Every single brand I can think of is talking about reducing the tail. What does reducing the tail mean? It means basically you're cutting, you used to have too many SKUs, and it was fine because the world was exuberant and you can deal with the complexity. Now you're focusing on so-called carryover products. Whether, again, Moncler, Gucci, Vuitton, anyone you can think of is focusing on their core, is focusing on replenishment of existing products, is focusing on, yes, you need a seasonal product to have people smile and to have people walk into the store, but keep it relatively limited in terms of inventory. So a combination of watch out for psychology and sensitivities, and on the other side, manage your business more efficiently and adapt to buy less, buy better, you'll have a reduced number of SKUs, and you will, it will lead you to have to really focus on the sort of bestsellers today are way way more than best, the so-called hero products. If you speak to people at Lauder or L'Oreal, they will tell you about hero products. They will tell you about the 80-20 rule, so 20% of our products account for 80% of our profits. Well, now it's pretty much the 120 rule. Basically the 20, there are very few products accounting for all of your profits today.
Okay, interesting. But one part of the question was about the greater climate change awareness, and this resonates also with one of the chapters of your book about values and responsibility, and how brands have to adapt to these new expectations from customers, and namely from younger generations of customers. Can you develop on that part as well, more specifically on the expectations regarding sustainability? Namely, do the customers really care about sustainability in the products they buy? And what is your take on this?
Yeah, so I think you're gradually going to see a shift from product to purpose. And you're not just going to buy a logo or a design, you're actually going to buy a broader story. I was quite impressed at how during the past 6 months, it's been very difficult for brands to push products online, on Instagram, on your email, on WhatsApp, etc. Because again, it might have seemed as inappropriate. And so I think the role of luxury is to capture the cultural zeitgeist. A lot of people, when Notre Dame was in flames a year and a half ago, and Kering and LVMH and others stepped in to finance the repairs of Notre Dame, a lot of American investors were asking, why are they doing that? That's not appropriate. But it is completely appropriate. You have a mission as a luxury sector to define the cultural zeitgeist. And so what happened during the 6 months of COVID is, instead of pushing products, I pushed PR to explain to consumers that I get it. I push PR to say I am repurposing production sites to produce hand sanitizers, to produce PPE, to give to charity, to finance the construction of a hospital in Milan. Are you expected to do that? No. But at the same time, consumers are hurting. They're going through a difficult period, and they like to think that you're a good corporate citizen. They like to think that you are taking from, you're giving back to the communities that they live in. They want to understand that there is proximity, that there is emotion, that you're not just a corporate trying to take the money and run and just developing products for a quick buck and for your P&L. So I think this idea of being a good corporate citizen was very obvious during COVID. I think beyond that, to your question, Paul, if you look at environmental, social, governance issues, that's also part of the trustworthiness of a brand. I'm buying a product, but I'm buying what's behind. Do I connect with that brand? Can I relate to their message? And you might have seen this. There's a pretty fun or pretty sad, depending on how you look at life, but cartoon, which shows a little wave, which is COVID-19, which is about to take over the citizens. And then behind that, you have a bigger wave, which is a huge recession. And then behind that, you have the so-called third wave, which is basically climate change. And the idea is to say, if you thought COVID-19 was an issue, wait and see. There are much bigger issues coming. And so it is the responsibility of brands and groups to understand, again, the cultural zeitgeist, and to understand what consumers have in mind. And the young consumers are asking questions that we were not at their age. Again, when I was working at LVMH and Richemont, I was selling products. They were, flying off the shelves. We didn't really think twice about it, and it was fine. How are they produced? Not sure. What's your footprint? Not sure. What is, corporate governance issues? Not that relevant. All of this is changing. People are asking questions. Now, again, like for everything, there are nuances, i.e., if you look about environmental issues, if you look about secondhand, if you look about the interest for circularity in luxury, this is big in certain European markets. This is big in the US. This is not really a big topic with the Chinese consumer for now. I say for now because Chinese consumers don't look at other Chinese consumers to understand where the world is going. A Chinese consumer, before being Chinese, is cosmopolitan. A Chinese consumer likes to relate to the Londoner, the Parisian, the New Yorker, the Tokyoite. She thinks of herself as a cosmopolitan consumer before being a Chinese consumer. So when she realizes that people in the US or people in Nordic European countries, for example, are asking tough questions, where did you produce this? What is the traceability? You know, when LVMH announced the bid for Tiffany, they made a presentation to analysts like us. And one of the selling points was to say, we're really happy to welcome Tiffany in the LVMH group because they have full traceability on diamonds. And people ask, well, why is that relevant? Well, because when you walk into a store at Tiffany and you're buying a 2-carat diamond, and they're able to tell you which mine it comes from and what have been the 21 transformation processes of that diamond, you like that, you know? And if you ask the question to other jewelers and they tell you, we don't know, we don't care, it's an issue. Now, don't get me wrong, it's an issue for 10% of people only. But those 10% of people have a voice, a share of voice, if I can say, which is way beyond 10%. And so they will start to ask questions around, whether it's the way you produce, fur, down jackets, coyote, whether, it has to do with the environment, it has to do with social issues, it has to do with governance issues. How is your management structure? Why does that make sense? What are your checks and balances? We keep on talking in politics about checks and balances. How is your group set up in terms of checks and balances? So all of these questions are I think, very relevant for a younger consumer who, again, is buying a product, but is also wanting to connect to values. I'll give you an example which is outside of the luxury industry, which is Nike. Nike has dominated the conversation around Black Lives Matter in the US. Now, a lot of people will say, oh, they took a lot of risks, and they have annoyed probably 5 or 10% of their consumers who started burning Nike shoes, etc. But they have absolutely delighted 90% of the other consumers who have been now loyal for life, and they've recruited a lot more. Now, when Dior does a collaboration with Nike, people think, oh, it looks cool. Yeah, it looks cool. But you're also associated to a very, very positive message that Nike is putting across with an up-and-coming American consumer. It's not just about putting a Nike logo on a Dior shoe or vice versa. It's about telling your Dior consumers, we get it. We understand the zeitgeist. We understand what's happening in the US. And we try to put it across. Now, sometimes you have missteps, so even the bigger brands, Dior, Dolce & Gabbana, Prada, Gucci, everyone has done, either campaigns or products that have basically rubbed people the wrong way. But that's the risk that's associated with being bold. I think you only get rewarded in luxury if you take risks. At the same time, if you take risks, there will be missteps. It happens. But you have to take into account, I think, the psychology of the consumer and her propensity to ask you questions that you weren't used to answering 10 years ago. Now you better find ways to answer them.
Thank you, Erwan. Dear all of you, we will try to take all the questions in the chat, but Paul and I are trying to moderate the chat according to also the main issues in the book. So we will not take the questions in the order they arrive, but we hope to answer to all of you. There's one question that is close to a chapter in your book, is on the future of luxury in retail, in the brick and mortar or online. It's Pauline's question. Here's my question. You mentioned earlier that the future of luxury is about selling stories online, but not selling online. What is your take on the evolution of physical retail then?
Yep. So again, if I go back to the premise that luxury is about recruitment, not repeat purchases yet, most of the sales are driven by people who are first-time purchasers. That's very different from Nike. That's very different from L'Occitane. Okay, I'll tell you about L'Occitane because we are in France. I mean, I'm not, but you are. L'Occitane has the best-selling product at L'Occitane is a shea butter hand cream. It costs $23. If you try it and you love it, do you really need to go to a store to get it? You know, it's a sort of replenishment product. It's a bit like a Nespresso capsule, okay? They have stores at Nespresso, and you can go and sample stuff, and you can go and buy a new machine if you want to. But if you drink 5 Nespresso capsules every day, you will be in a replenishment mode, okay? Nike is similar, i.e., you can touch and feel in a store, but the reality is if you know your shoe size and you've been buying at Nike for the past 10 years, it's again going to be replenishment. And so when Nike tells me more than half of my sales will be online eventually, I believe them. When L'Occitane tells me last quarter, 53% of my global sales were online, I'm not surprised. But if a luxury, you know, a premium European luxury brand tells me more than half of my business is online, there's an issue. There's an issue because either they're not really luxury or they're taking huge risks in terms of brand equity. Again, the reality is, let's pretend like 72% of consumers at Moncler that I'm a first-time purchaser. You talk a lot about storytelling between brands and consumers. I think the bigger influence is storytelling between consumers themselves, okay? So if I'm buying my first Moncler jacket, or if I'm buying my first Gucci handbag, or if I'm buying my first Cartier watch, and the story I tell to my buddy is, I clicked twice and I waited for 3 days and I got the product. I have no story, right? And I'm spending a lot. I'm not spending $23 like on the L'Occitane Shea Butter hand cream. I'm spending $1,000, $2,000 potentially on a handbag or a watch. And so it's important for me to touch and feel, to have, I've seen blogs and forums and I've seen the website and I've downloaded maybe a few videos, but I want to have a sales associate tell me, you know, what she has experienced from the brand, why this product is a bestseller, what happened when it was created in the 60s and how have they revamped it. I want to have something that justifies the price I'm paying. And again, it's my first experience. My first experience can't be just 2 clicks and I'm shipped the following day. That's thoroughly depressing. So my view is, so Moncler recently said, our sales last year were about 10% online, and in the next 3 years, it'll be about 20%. I think that's a fair assessment, that online sales will structurally go higher because of convenience, because of, again, a move towards more repeat purchases. But you know, 20–25% seems like a good number. The reverse from that is that your brick and mortar can't be the old school brick and mortar. It can't be the copy and paste that I was mentioning that a lot of brands rolled out in China. Again, you know, I'm not obsessed about Vuitton, but if you look at the 40 stores that Vuitton had in China 5 years ago, they were all cookie cutter, copy and paste, all look the same. If you look at the Vuitton stores in Tokyo, I think they have 10 or 12, they're all completely different. One is specific to men's accessories. One is specific to, you know, ready to wear and footwear for women. One is a gigantic flagship with, you know, amenities around. One is a tiny, hard to find, edgy, you know, neighborhood, local feel for Japanese only that the Chinese will never discover. You know, it's all about the refinement of the positioning, and again, moving away from déjà vu. Now, this has a cost. You know, it is less costly to develop a concept and copy and paste it 40 times than it is to have unique, bespoke experiences in retail. But retail is the media. You know, retail, I think a lot of managers in retail have focused on the wrong metric. They focused on like for like. It's not just about like for like growth. It's also about what people have called NPS, so the net promoter score. It's about, if I go to this or that, so the Atelier Chanel, for example, downtown in New York, no one goes there, but the few people who do tell everyone around them, I've never been treated like this. It's an exceptional experience. You should go. The power of influence between consumers is way stronger than the power of influence between the brand and the consumer. So we are in a world of micro influencers. We are in a world where if you are the 50-second brand using Kendall Jenner, do I really think it's for me? Yeah, you're going to appeal to, you know, big numbers, but am I going to feel an incredible emotion? No, I'd rather have my best friend forever telling me this is a great product and me checking it out than having Kendall Jenner tell me that it's a great product.
Thank you. Paul, I'll let you pick the next question out of the chat, maybe.
Yeah, maybe before taking the next question from the chat, I had a question about generations and youth, because one part of your book is about this idea that consumers are much younger today than they used to be, and they will become probably younger and younger. We've been told about millennials over the past years. Now it's all about Gen Z and TikTok, etc. How do you describe the influence of generations on luxury consumption, and what it's going to change in the next years?
Yeah, I think you had a really interesting ad in France from a brand called Le Comptoir des Cotonniers, like 10, 15 years ago, where you had a daughter looking up to her mom to try to get some cues on, you know, how she should dress. And I think that's been completely flipped now. You know, I think people our age look to people who are in their 20s to understand how we should be dressing up. So the power of influence of this generation is tremendous. And I think people buy luxury at a very young age, again, mostly for fitting in purposes. And they will cut back on a lot of other subsectors to be able to step up to these brands. And so again, I think there was a wrong assumption that the younger generation would move away from luxury and spend on other, you know, experiences, etc. And you know, you're talking about TikTok or Snap or Instagram. This is a world that is dominated by image, your perception with your groups of friends. And what you wear and how you wear it is super important. So again, people have missed that we are in a selfie generation and that image is key. And again, this premise that the younger generation would have no interest in luxury, it's the exact opposite that's happening. I've looked at a few metrics in terms of the modal age. So the modal age is basically the age where you have the highest proportion of population. It's basically 31 in China. It's 26 in the US. So it's not as young as you maybe would think, but what's coming next? I mean, you know, for people who believe that India or Indonesia or Brazil is next, is that those markets, modal ages is significantly lower. Actually, in India, it's 12 years old. I'm not going to pretend to tell you that the 12-year-old is about to move the needle today. You know, we talked about India 15 years ago. We're probably still going to talk about India 15 years from now, and it still won't move the needle significantly, but incremental growth from these sort of more alternative emerging markets will be driven by youth. And again, youth influences the older generations. It's not the other way around as it used to be.
Okay, thank you very much. One of the questions we have in the chat is from who is asking that question? Lina, sorry. Do you think that one day luxury could become accessible to the middle classes thanks to the increase in per capita income in the next few years, which to me relates to the debate in luxury between exclusivity and inclusivity, and how rarity versus openness, etc. What do you think of this?
Yeah, so I think it's already happened in China and in the US. Let's look at it this way. If you look at affordable luxury, if you look at a brand like Coach or Michael Kors, and you can afford it today, or you can afford Vuitton or Gucci or Chanel in 6 months, you'll wait 6 months. And the reason for that is return on investment, okay? The Coach or Kors handbag will cost you a third or a fourth or a fifth, but the return on that investment will be a 10th, okay? So when I was based in Hong Kong, I had very weird conversations with Chinese consumers who were telling me Hermes is value for money. Now, value for money is not the same thing as cheap, okay? Value for money means that if I'm paying 10 times for an Hermes handbag relative to a Coach handbag, I'm getting 20 times the return in terms of fitting in with my peer groups, with my family members, with my coworkers. So now the interesting element that you're pointing to is the risk of ubiquity, you know, and the risk that you had 8-9 years ago of people saying, oh, I'm not buying Vuitton, it's a brand for secretaries, okay? So it's balancing volumes versus the illusion of scarcity. In luxury, I don't think there is scarcity. You know, unless you are Hermes or Patek Philippe or 1 or 2 other brands, there's actually no scarcity, okay? Vuitton will not tell you we're running out of cows to produce leather handbags, okay? There is no scarcity. It's only the illusion of scarcity and how you give the illusion to that consumer that she is unique, that the email she just received or the WhatsApp she just received or the service she just received in the store, she's the only one to have access to that. Now, brands, the mega brands in the space, so again, not to repeat myself, but basically Chanel, Gucci, Vuitton, were the biggest victims of the ubiquity risk 7-8 years ago. And they all adapted their product assortment incredibly well. You know, if you go back to the comment of Vuitton as a brand for secretaries, which I used to hear on almost a daily basis 7-8 years ago in Hong Kong, I haven't heard it in 5 years. And the reason I haven't heard it in 5 years is you've had hyper segmentation at Vuitton. So they used to be very much relying on the monogram, you know, and that's all you saw and people got fed up. And then suddenly they developed higher end leather, you know, the Capucine, which is Hermes type price points, much more discreet in terms of logo content, much higher quality of leather for people in the know, okay? And so hyper-segmented product, hyper-segmented price points, hyper-segmented the experience. And so you came to a point where, again, when I was based in Hong Kong, you had uber wealthy individuals going to Vuitton and they were expecting to go to the VVVIP salon and drink the champagne that they've been accustomed to and speak to the sales associate they've known for ages and spend half of the day there and spend 100,000 euro equivalent and be presented with products that probably no one else would see, okay? And, you know, 10 yards from there, 10 meters, I should say, from there, you had the sort of up and coming, you know, third tier city, middle class consumer buying Vuitton for the first time with a piece of paper with a list that she was going to bring back to her buddies in Guangzhou or wherever. She would be in and out in 5 minutes. She went through the list. This is what I'm bringing back to my friends. This is what I want for myself. She thought she had a great experience. The uber wealthy Hong Kongese Tai thought she had an incredible experience. And no one says, I'm fed up of Vuitton because it's a brand for secretaries. Because they have made it, they have given you the illusion that the product, the experience, the retail connection, the communication with the staff is particular to you, no one else. So it's all about how do you make that illusion of scarcity continue. I'll give you another example again on Vuitton, because again, Vuitton was the most ubiquitous brand on the planet. When they put out a new collection 7 years ago in Hong Kong, usually you launch a collection in a flagship store or you book a hotel room. This time around, they basically bought an apartment in Hong Kong and they Vuittonized it. And they basically invited only super VIP media people and a few super VIP clients. The entire city of Hong Kong heard about it. No one got invited, okay? But everyone heard about it. And so suddenly you moved from Vuitton as the most common brand on the planet to, oh, actually, did you hear about this apartment that they have? I heard so-and-so got invited. Suddenly you move from incredibly ubiquitous to incredibly niche and edgy, even for a brand that's, you know, as big as Vuitton. So I think, again, it's genius marketing. It's genius product segmentation. It's genius retail segmentation. But don't be under the illusion that there's a lot of scarcity in luxury. It's about feeding the dream. It's about feeding the illusion of scarcity and giving you the illusion that, again, you've been treated like no one else has been treated. So scale is not an issue, actually. Scale is not an issue if you have sufficient differentiation between your stores, between your product assortment. And to the question, is it an issue that at some stage middle class enters? Middle class has entered. You know, the middle class is, for me, you could call it the upper middle class maybe, but is the reason why Gucci and Vuitton, the two sort of real compounding growth brands in the industry for the past 5 years, have done so well. They didn't necessarily brag about it, but the initial starting point was they redefined access. You know, they redeveloped an entire category of products that gave you the possibility to step up. You know, you weren't necessarily willing to buy Course and Coach because the gap, you know, if it's 40% more expensive to get a Gucci or a Vuitton, I'll wait and I'll get that because validation will be much better for me. So these are brands that have tremendous volumes. These are brands that are, you know, at 10 billion or more in sales. And these are brands that technically could have been wiped out by the ubiquity issue 7-8 years ago, but they were smart and they reacted very quickly and they addressed the issue. And broadly speaking, I don't think that you hear anymore a lot of consumers saying, I'm fed up with that brand, I've seen it too much. And then you have other policies. You know, when a handbag is too successful at Chanel, they take it out of the assortment. You know, they ensure that ubiquity is basically killed. They can do that. They're not listed. They don't care about the next quarter, the next year. You know, they think for the next generation properly. And, you know, they will take extreme measures to ensure that no one says, I've seen Chanel too much.
Can I ask the next question on the behalf of Yekaterina Bibekina, please? She says she reads with pleasure your comments and articles in Business of Fashion. And she has the following question. They're working on a project right now. And the question, is it the right time to launch new projects during this period? They're working on a case with Chanel jewelry and the students of the first year of the master. And she's wondering what may be the risks and the advantages of launching new products in a period like this.
Yeah, I mean, I think it's important to be present. I think it's important to be visible, again, for the right reasons. But I don't think there's any harm in launching in the current period. I just think you have to be a bit wary in terms of the volumes you wish to allocate. Let's take the example of Moncler. Moncler has this genius project, which is basically institutionalizing collaborations with artists. You know, ages ago, some brands every 2-3 years had a collaboration with Kusama or another artist to, you know, to develop a collection. If they are doing it on a monthly basis, which is close to crazy, right? Because it's in terms of logistics, production, design, marketing, retail, it's very, very difficult to deal with. At the same time, every month when you go past a Moncler shopping window display, there's something going on. You might hate it, you might love it, but whatever happens, you'll be noticing it because it jumps out at you because it's incredibly creative. So if the idea is you should not launch anything for the next 6 months because who knows what the consumer is going to have in mind, no, absolutely not. The world goes on, and it's your role, again, to accompany the consumer out of this, to give her hope, to give her something to look forward to give her a smile if she's been depressed during this period. Again, luxury is aspirational. You can't stop everything you're doing. And basically, you know, you will focus more, as I said before, on carryover products because you don't want to be left with excess inventories. And because, as I said, a lot of consumers are focusing on the best sellers today. But it doesn't mean you're going to kill your design studios. It doesn't mean you have to kill creativity. If anything, there's so much to say right now. You know, design studios must be absolutely exploding with new ideas because the world is crazy, but sometimes there's some good in crazy. You know, sometimes creativity comes from those tensions. And so to think, okay, we'll put our head in the sand and hope that the world goes better, and then we'll launch in 6 or 12 months, that's not an option. You know, you are there, again, for the consumer. You are there to surprise her, to delight her, to have her come back. Give her the aspiration to come back and visit your store. And if it's buying a reference product that she's been dreaming about for 5 years, fine. But if she's already a consumer and she's looking for something that's new and crazy, give her that.
Thank you, Erwan. We have a question that is specifically focused on New York, so it's this one is for you. It's from Eugenie, wondering about the luxury retail landscape in New York City. She says she has, of course, she's mentioning Barney's going bankrupt, Madison Avenue and Baker Street empty storefronts, Hudson Yards not paying off, etc. What she feels in contradiction with what you were saying at the beginning about the rebound in the US. So, is there any reason for that discrepancy?
Yeah. So a few things here. I would say thanks for the question, Eugenie. The rebound in the US is partly linked to repatriation, not to the same extent as in China. In China, you had about Chinese were spending about 2/3 abroad, 1/3 at home. No one's going abroad anymore. So obviously the repatriation in China is massive. In the US, American consumers, especially during this summer period that we just have gone through, you used to have a lot of American tourists in the streets of London, Paris, Milan. Obviously, you've seen none of those over the summer, and so they stayed at home. So that's just one reason why the American consumer is the US is doing better. I would point to the fact that again, equity markets are at an all-time high. I would also mention the reality of the Biden campaign talking about a K-shaped recovery. So people who were well off before the crisis are actually better off, bizarrely. They're better off because of equity markets. They're better off because if you're a wealthy individual and you're based in New York and you have a house in the Hamptons, which is not my case, unfortunately, the house is worth 25% more today. You have been staycationing, okay? You have not taken that trip to Europe. You have not spent on flights. You have not spent on hotels. You haven't been to Michelin star restaurants because they're all closed. And you've survived this. And you think, okay, I'm allowed to reward myself. I am buying luxury products. New York specifically is a bit weird because New York is the city in the US which is the most driven by two things: tourists and businesses. So if you look at tourists, I happen to work near Bryant Park, where you have a lot of Maison Kaiser or Maison Kaiser, as they say here, that are basically driven by business. People who work in banks or who work in industries, and all of those buildings are empty. They went bust. Maison Kaiser went bust about 2 weeks ago, and others are about to go bust shortly. They didn't have the business people, and they certainly didn't have the tourists either. So my view is, yes, you're right. There are certain areas in New York that look a bit deserted. There are areas downtown where, honestly, some of the luxury streets are incredibly empty. There are other areas, Upper East. Half the people Upper East might have a house in the Hamptons, so it's pretty quiet. The traffic is pretty quiet, but the conversion and the spending is off the charts. That's what is important to remember in luxury. When you're selling high-ticket items, it's not necessarily the number of people who go through the door, it's how much they spend. And you will have people who have not spent anything for the past 6 months, who might go to a Fifth Avenue or a Madison Avenue flagship, and who basically account for your week's sales, just one person. So again, it's maybe we won't call it revenge purchasing like in China, but there's clear evidence of pent-up demand. I would say New York is more under pressure than other parts of the US because of how rough it's been here, because of the fatalities during the peak of the crisis, because of the trauma that came with that. So you don't have tourists, businesses are reopening very slowly, and people are still very fearful. It's one of the rare areas in the US where there's a lot of discipline. When I walk the streets of Manhattan, everyone is wearing a mask. At the beginning of this, everyone was in Central Park as if nothing had happened. You know, I think the level of fear has been such that people are a lot more cautious. So yes, indeed, probably the stores in Florida, the stores in California, despite the fires, the stores in Texas, the stores in Chicago might actually be doing better than the stores in New York, because these are cities where tourism flows are less relevant. And these are cities where businesses have reopened more swiftly than in New York.
Okay, dear all, I think we have a lot of really interesting questions. It shows such passion for your conference. It's really great and a pleasure. And I'm afraid we will not be able to go through with all of them. I guess we've come to the last question, maybe, unless we manage to answer it quickly. I don't know, but it's worth thinking about. It's a question by Paula. It's the next in the row. Her question is on the gender inclusivity, about the ideas that the future is female and the cosmetics for men are becoming a thing slowly. In your opinion, is the luxury industry able to keep up with the time in this regard, with the zeitgeist, as you would say? Because Paula would argue that the idea of a gender being binary is already regarded as old-fashioned for many people in the younger generations, and that the focus is shifting towards making all products available to all genders, not just men and women. Thank you very much for your time.
No, that's a very good point. I think, I think a lot of people, notably in the US, talk about gender fluidity and talk about products that can be relevant regardless of the way you define the gender. I think there's another reality that is about to come, in my view, which is how the management teams themselves are set up. So I think, the role of minorities, the role of women, the role of a younger generation will have to have boards and executive committees and basically management teams evolve. You need more women. You need younger people. You need more representatives of minorities. If you look in the US, the African American community, the Hispanic community is very keen on luxury products and has been for ages. You might remember that the first dedicated Louis Vuitton campaign in the US in 2003 was with J-Lo. It was not by chance. And I think minority communities here and in Europe are very influential. So I think you need to have change from a gender perspective. I think you need to have change from a generational perspective. If you're in your 50s or 60s trying to address a young female Asian consumer in her 20s, there are a few things that you won't capture. I mean, some groups actually worked with some of the managers work with Gen Zs to help them understand where the world is going, and that could be an option. But yeah, I think it's a fair point. I think defining gender things are, the definition itself is evolving, and indeed gender fluidity or products that are I wouldn't say gender neutral, but basically adapted to anyone of a certain age or a certain having certain means to consume. That's bound to develop more and more. Now, some subsectors will be more adapted than others. Some brands, history or DNA will be more adapted than others to address that. But yeah, it's a fair point.
Thank you very much. I think Paul is our timekeeper, so I'll let him
we
decide.
may have time to squeeze maybe one last question. I noticed one that is quite interesting and also relevant to what you write in the book about the notion of access versus possession from Julian. This idea that luxury consumption will become rather about access than possession in the future. So new business models, etc., etc. Maybe you can say a few words about that before we conclude the session.
Yeah. So I think again this idea of renting or this idea of buying secondhand or this idea of circularity is something that's getting a lot of traction here in the US, to a lesser extent in Europe, and almost nothing in China. I've done a few surveys, so we tend to interview 2,000 consumers. Usually we do this as a combination. We do 2,000 in the US, 2,000 in China, and then we select a few European markets. When we asked the question, do you have an interest for secondhand products? We had 25% of American respondents saying yes. We had close to 0 in China. But again, it might just be a question of time. And if you think about owning versus renting versus buying secondhand, I think for the time being, again, because it's a first-time purchase in China, you want the latest, the greatest, the most recent. The idea of buying secondhand or the idea of renting or the idea of buying vintage, again, is more of a Western idea for now. But I think it will gain traction. One thing that I firmly believe in is that there is a huge potential for secondhand. Right now, secondhand has been mostly run by third-party partners, not the brands themselves. The brands actually benefit from this because it actually funnels a lot of recruitment because it just so happens that consumers who initially buy secondhand at some point then become first-hand, full-price purchasers of some of the brands. My issue with that is I think the brands should run it. I think on a Prada or a Gucci website, you should have somewhere a sort of vintage or a sort of secondhand module that enables you to have products that are authenticated by the brand and that offer you a 70s or 80s or 90s or whatever decade you aspire to finding again approach, and it will be a sales and profit generator, and it will also help you address the real issue of luxury, which is that it's the most pollutive industry on the planet, and that's a problem. What Patagonia managed to do 10 years ago, which is basically to extend the lifespan of your product. If I buy a Patagonia, sweatshirt, I can bring it back for them to repair, or I can bring it back to them to give to someone else to use. But the lifespan is being expanded. The idea that you buy a dress and you wear it 3 times and then you throw it away and you contribute to polluting this planet is completely crazy. So I'm a great believer in secondhand. I'm a great believer in the the idea of extending the lifespan of a product, but I do believe that eventually the brands will have to take control of that. I don't think you need to leave it to a third-party partner.
Excuse me, Erwan, I hate to contradict, but I beg to differ. Do you really believe that luxury is the most polluting industry? Because luxury products are made to last. It's more fast fashion, no? I mean, if I buy a luxury product, I will keep it forever and hand it on to my children. So that makes it less pollutive than fast fashion.
That's right. I meant fashion, actually.
Okay, so we can...
that book, there's a great book called Fashionopolis. And to your point, it's not just about luxury, it's also about fast fashion. And this idea of materials that are non-recyclable. You see a lot of initiatives right now. Prada is putting out Re-Nylon, which is basically a revamp of its nylon range, only made with ocean plastics and recycled materials. I said luxury, but you're right. I meant fashion. Luxury. To your point, the dream. Everyone's dream is to eventually aspire to. The Patek ad of I'm buying it for the next generation to be a reality. Everyone's hopeful that it is a proper investment, that this handbag, this watch, this piece of jewelry, I'll pass it on to the next generation. Hopefully they'll pass it on to the one after. Sorry about the confusion. I was really on more apparel and footwear, which I think is we have not found a way in luxury to extend the lifespan and to basically have it circular.
Thank you very much.
That will be another very interesting debate.
Yes.
And there are many things happening at the moment about sustainability in luxury and in fashion at large. Thank you very much, Erwan, for your time. I think everyone, I see the comments, everyone finds this moment really fascinating and really dynamic, and you are very clear in your explanations and considerations. So thank you very much. I think nobody lost its time when listening to you and to this presentation. I will remind the book, Future Luxe. You can find it easily on the internet, I guess. And it's really very interesting with also interviews of luxury CEOs, etc. So
No, thank you very much for the opportunity. I wanted to thank you again, Paul and Eva, for making this possible. I'd like to thank the students. The book is actually, you can order it on Amazon, but if you're allergic to Amazon, feel free to ask your bookstore to order it for you. And I'll be happy to answer any questions. You can ping me by email or LinkedIn, or if there are a lot of questions, hopefully not too many that I haven't answered, I'm around to try to help if I can.
Thank you so very much, Erwan. This has been an amazing opportunity for the students, and I'm really grateful to the Luxury Group for accompanying the students and opening events like this to them. This is really very precious for us. And as for the book, you can order it through the Sciences Po bookstore, of course, and it's also present at the library. So do read it. Do read the preceding book by Erwan, which is very precious for your business case. And thank you so much. Thanks, both of you. And this has been a very interesting evening.
Thank you, Eva. Thank you again, Erwan.
Thanks
Have
a lot.
good evening.
Bye-bye. Thank you.
Bye. Cheers.
Bye.